Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock related queries answered by the experts. In a short while from now, we'll connect with them. But before that, let's have a look at what the markets are up to. So Cheryl, though Nifty 50 has drifted from the day's highest point, but it's the bank Nifty that is showing a bit of an outperformance till now.
Absolutely. A very good morning to you, Shrishti. And if you look at the markets, our Indian markets are faring definitely much better than what the US markets had actually performed in overnight trading session. Remember that the US markets ended in the negative territory because there was a huge retreat coming in from the mega cap stocks. But Indian markets did open on a firm footing. No doubt we have drifted a tad bit lower from the day's highest point. Nevertheless, Nifty is above the 18,700 mark as of now. You have 60 hours Sensex that has reclaimed that 63,000 mark as well. Let's talk about Nifty Bank and what is that doing in the trading session today. If you look at Nifty Bank, it's trading with gains about 0.2%. That one also, the movement of Nifty Bank is in tandem with the benchmark indices of the day's highest point. Let's take a note of the gainers and the losers in trade today. Take a look at Bharti Airtel, that is the top gainer on the Nifty, followed by Apollo Hospitals, HDFC Life, BPCL as well as Tata Motors. All of them are seeing good strength in today's trading session. But on the flip side and on the losing end of the market, you have Cipla that is seeing some sort of a decline, 1.2% downtick coming in for Cipla. UPL, Titan, IndusInd Bank and Sun Pharma are the other set of names that are declining in today's trading session. Putting the spotlight on the sectoral indices then, as of now, if you look at sectoral indices, almost all the sectors are gaining in trade, barring FMCG. Right now you have Pharma Index that is actually struggling at the flat line. But talking about the gainer is the Realty Index, that's the top sectoral gainer, 1.2% uptick coming in for the Realty Index. You have Metal Index also, that's among the top gainers. And the broader markets, once again, outperforming the benchmark indices with small cap index seeing gains of about 0.8%. But you know, Shrishti, that's the way how the markets are looking like in today's trading session. But it's very key to note in the market the performance that has been of the new age tech companies. If you look from the 52 or rather from the year low, they have actually seen a smart recovery, isn't it?
Well, yes, absolutely. And Cheryl, a lot of viewers were being stuck in all these newish technology companies from the likes of PB Fintech, Paytm as well as Zomato. But what a recovery they have seen from their 52-week low levels, because Zomato, PB Fintech and Paytm are up anywhere between 80 to 90%. And on to the Buy Now, Sell Now lens, we're going to be focusing this particular topic. All these new age counters are in focus as we are looking at these stocks. These stocks are slowly trying to make a recovery. But did we just miss the chance to hop on the bus going that path? We will go across to our experts on this. But before that, let's go across to Anisha, who is here to give us the basic brokerage picture and how are they targeting and looking out for these particular counters. Take it away, Anisha.
Well, yeah, you already did highlight the fact these stocks are off the 52-week lows, and that data point should come up for you on the screen anywhere from around 80 to 90% for the likes of Paytm, PB Fintech, Zomato, while the likes of Cartrade, Nykaa and RateGain have also managed to eke out solid gains from their 52-week lows, but much less than what the frontliners have done, and the likes of Nykaa have been underperforming. But what is important to note is even if they're off the 52-week lows, they're far away from their IPO prices, whether it's a Paytm or a PB Fintech for that matter. They're still far away from those IPO prices. So the investors have a long way to catch up still. Having said that, the rally has been stupendous, but the question is, are we peaking out a bit? And that is where the street is divided a bit. Recently, we have heard the brokerage commentary also turning a bit more cautious because the run-up of the stocks has been much ahead of the fundamentals. So they're already pricing in a lot of positives, whatever has been the path to profitability. That is something that the street has already baked into the price. The execution is still lagging. So that is something that you need to watch out for. Just to put it in context, Macquarie today has downgraded Paytm. They have no other worries with the stock and the performance, but the only point is that stock has run up, and that's why they are downgrading the stock. They have made no earnings changes. In fact, they expect Paytm to report accounting profitability by FY26, and the target price is still close to around 800 rupees. We had seen recently a bit of a divided view coming in for PB Fintech as well. It was just 8th of June that when there was a downgrade coming in from Bank of America. Again, the price target wasn't moved a bit, but it was the fact that the rating was changed from buy to underperform. And again, they had the same point that the has run up, and going forward there's a possibility that the company might hit a bit of a rough patch when it comes to growth given the higher base. Similarly, you also have Kotak, which had come out with a note on PB Fintech. Again, citing the sharp stock appreciation, they say that they were able to find better trade-offs in life insurance space, given the fact that stock and that space was beaten down. So overall, yes, the fundamentals are all right, but the question is it in price?
Actually, obviously, thank you so much for that, Anisha, for putting all of that in context. Given the fact that these counters have seen a sharp recovery from their 52-week low levels, but the fact being that now you have brokerages that are actually cutting their recommendations on these counters, given the fact they've run up too much. But what should you do with your holdings in these particular counters? Or if you've not already bought into these counters, what should your strategy be? Let's bring on board our experts for today. We have Kunal Bothra as well as Shahina Muqaddam joining us on the show. Very good morning to you, Shahina, as well as Kunal. Thank you so much for joining us on ET Now. Very interesting topic, Shahina. You heard what brokerages are doing. There was a time when they were downgrading because they weren't seeing profitability or no outlook on profitability in some of these new age tech counters. Now the picture has turned. They're expecting these companies to turn profitable in near term or medium term or so, but they're downgrading because the stocks have run up sharply. What should investors do now?
Well, I actually agree with this view that they are expensive currently, despite having shown very good performance in terms of even the actual fundamental performance. If you saw the last quarter, Paytm, actually its loan disbursement grew by almost close to 300%. So there is no doubt that the performance is improving. And as your analyst mentioned, yes, they are looking to move into profits over the next, in the medium to longer term. But currently they are making losses, and valuations, in my view, after this jump, after this rebound in most of the stocks, actually factors in this improved performance. So what I would believe is that now at current levels, it becomes for a long-term investor, investment in these stocks as of now is risky, because there are a couple of issues. While there is no doubt about the potential, the long-term potential for these platform stocks and the opportunity that India offers for growth, at the same time, there are a lot of new technologies that are coming in. So to give a very high valuation to these companies as of now, in my view, is a risk. At the same time, I think you can look to invest in some of the companies that have shown that it is difficult to replicate their business. Something like maybe a PB fintech, you have Zomato. I would also like to invest a bit in Reddington. So I think these are some of the stocks that I could still look to invest in. But I think at the same time, basket investing in platform stocks is risky.
That's a view coming in from Shahina on the new age tech stocks, and also she's saying that she prefers PB Fintech, Info Edge, Zomato as well as Reddington in that particular basket. But Kunal, I'll come very shortly to you to talk about what's your take on the new age tech stocks. But before that, let's take a look at Cyient DLM. Remember that this particular counter is going to be coming out with its IPO, or rather this company is going to come out with the IPO. And to talk more about the prospects going ahead for the company, where do they plan to go ahead and utilize these IPO proceeds, let's bring on board the management of Cyient DLM in a short while from now. But let's also remember the fact that the IPO will be opening today for subscription, that is Cyient DLM IPO that is opening for subscription today. And let's go across to the management. We have Mr. Krishna, who's the chairman, non-executive and non-independent director, Cyient DLM, joining us on the show. Very good morning to you, sir. Thank you so much for joining us on ET Now. And firstly, let me ask you about your IPO, and also we want to understand the reason for the IPO size reduction. Is this because of the investor feedback was such, or the business requirement has changed now?
So the IPO size was cut down from 740 crores to 700 crores, of which, and then Amansa took a pre-placement of approximately 108 crores. That's why the IPO size shows up as 592, but the IPO size is 700 crores. So it was a slight reduction. We were just looking at some of the capital requirements and how we can deploy the capital. We took some feedback from the market in terms of what is the right number for us, and we triangulated to that number. So if you look at it, it is a reduction, but not a very large reduction. It's less than a 5% reduction. It's just, that's how it worked out based on how we thought we could deploy funds effectively, quickly, because we are also responsible for deploying funds as we say we will. Therefore, we took that call to say it's better to take a smaller number rather than rather than a larger number at this point.
Good morning, sir. This is Vinny joining in the conversation as well. What we also wanted to understand, even if we look, at the stock valuation, it's very close to the average of the peers, or in fact, a little cheaper than that. Despite you having ambitious targets of 5 times in 5 years, why is that?
Not really. I mean, I think we had some very good bankers who helped us arrive at a fair valuation. And Cyient as a promoter also agreed, or the board of Cyient as a promoter also agreed that that was a fair valuation. Obviously, I think we're very cognizant that the value or the valuation follows the value that we deliver. So we're quite confident about the value that we will deliver the next few years, and therefore valuation will be an outcome of that. So I think that's the fair way to do this, rather than do it on a hypothesis or on any euphoria. Therefore, we thought this was the fair value, and I think that's something that the Cyient board also strongly agreed with.
Right. The industry growth rate is approximately 30 to 40%, but yours has been actually languishing around the early teens level. Are you expecting that to catch up to the industry average, at least, if not better?
Absolutely. I think the previous year was, I think, roughly 15%. And there's a few reasons for that, including the fact that we were more focused on margins. Margins are now at approximately 11%. Last year, they were a little bit higher even. This year, we made some investments which brought it down to 11%. So growth was 15% last year. But going forward, will be aligned to the industry growth rate. I don't think we said the growth rate would be single digit at any point going forward. We're quite confident that going forward, the growth rate will be aligned at least to the industry. And if you look at our order book, which is approximately 2,500 crores on an 850 crore or so revenue base, that also bodes to the fact that there is some good growth ahead, and we're talking based on an order book rather than anything else.
So let's then talk about the order book. Where's that growth coming from? Which segment is seeing the maximum traction?
So the order book is still quite concentrated on the electronic manufacturing. That's where our biggest value proposition is. And that's where we also make some of the best margins and have the best stickiness to the customer, because that's the kind of electronic manufacturing that we do is very high precision. And therefore, it's built on some very unique capabilities, both in manufacturing, but also in special processes, finishing, etc. So much of the order book is really building up in aerospace, defense, and industrial. The fourth vertical that we're also focused on, medical, also has a strong order book. So while aerospace and defense is a large part right now, we believe that going forward it will even out a little bit based on how the order book is building up.
Right. The street actually was a bit worried about the client matrix, whether the reduction on the client's front or the high concentration. If you could elaborate more on that, what's your take on that particular front?
So if you look at the top 10 customers, there's 5 that we've mentioned. There's 5 key clients, not all, I think 4 of them are top 10. But if you look at our top 10 customers, they're some of the largest manufacturing innovators in the world. The amount of money that they spend in areas of interest to us are in the billions of dollars each. So the market share that we have with our key clients is quite small right now, and that is really the immediate opportunity, and that's where we're seeing the immediate growth also coming, is because how these key clients will shape up. So in that context, we are very confident that the client concentration is not a problem, because again, like I said, these are the largest manufacturing innovators in the world, and if these companies stop spending on manufacturing, then there's a much bigger macro challenge than just Cyient DLM being impacted.
So, you have spoken about the gross margin outlook, but could you help us a bit more with the timeline from current 11%? When does it see it improving to the 13 to 15% mark?
This year, of course, there was a drop because from roughly 12% to roughly 11%. Because if you look at it, the drop didn't come from gross margin, it came from sort of between gross and EBIT or EBITDA. The reason for that is we've made a number of investments, both in terms of the leadership team, but also in terms of the sales team. We've made a lot of investments on supply chain and on technology. So as growth happens and as we see the growth happening, the absorption will take care of a lot of that, and therefore this year we might still be about flattish with margins, with where with again the investments still continuing for the year, but going forward, where we believe that we have a clear line of sight to 13 to 15% EBITDA margins.
Right, and since you are with us, let's actually talk about Cyient as well. You recently completed the CITIC acquisition. If you could tell us, net is Q1 trending similar to Q4 or better or worse? What's your outlook on that particular front?
So I would say the net is flattish because there are industries where it is better. If you look at industries like aerospace, which have come back very, very strongly, there are industries like energy, where our solutions, our services are quite unique. Again, we're seeing some very, very strong demand. But on the flip side, there are also industries like communications, where the demand is a little bit weaker because a lot of their spend is capex related, and with where the interest rates, etc., are, there is a bit of a lull on the capex cycles. So I'd say in industries like communications, where our customers borrow and then invest in capex, there is a bit of a lull because I think the interest rates and where things are doesn't support that. But where our clients, which is again a majority, where our clients do their own R&D, I would say if anything, things are getting better. So if I take a weighted average, I would say about the same, maybe slightly with a positive bias, I guess, I'd say, in the financial industry.
All right, Mr. Krishna, we'll leave it there. Thank you so much for joining us on ET Now, and also all the best for your IPO, which has opened for subscription today, and also thereafter for the listing. And that was the management of Cyient DLM talking about how they plan to use their IPO proceeds. And also remember, they've said that they're quite confident that they were able to deliver value to their shareholders. Also confident that the growth rate will align to industry average of about 30 to 40%. But let's move on then, and let's continue with our topic of lens. And remember that we did speak about how these new age tech companies have recovered from their 52-week low levels. But the key question remains, have we missed the bus to go ahead and invest in these counters? We've got Shahina's take, who believe that you should not dive totally into the entire basket of new age tech stocks altogether. Some of the valuations seem expensive, and she did give her top picks as well in the new age tech stock basket. But Kunal, what's your take, and where do you see these companies headed from here on, given the fact we've seen sharp rally coming in? Brokerage is now downgraded the counters, saying that the rally is overdone.
I think I've been very bullish on the space over the last many months, since even at a time when these stocks were actually making 52-week low for themselves on a consecutive basis. I believe that good news, good prices, they don't come together for these stocks. We've seen that happening for so many of the large cap names or the quality stocks over the last so many years. I would still believe very similar kind of price trends should continue for Paytm, Zomato, Policybazaar, etc. Many of these new age stocks, they look very attractive. In fact, many of these stocks are actually showing signs of a strong uptrend, formation of higher highs and higher lows. Even in the likes of Paytm, the stock has changed or upped its base substantially from an earlier base of 550 levels to 650, and then now 700, 750, which is acting as a major support for Paytm. I would believe that current price is actually a very good time to start nibbling into the stock. Yes, the journey on the upside could be more high beta, and there could be a higher round of volatility into these names. So have a buffer margin of 10 to 15% at least if you're looking to add on dips.
All right, so that's a strategy that one should adopt while looking at new age tech stocks, especially Paytm as well. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries, viewers, so don't go anywhere.
Welcome back. You're tuned into Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And viewers, you can connect to us live on a WhatsApp number that will be flashing on the top of our screen. But do not call us. We can't take your calls or your video calls as well. So just write your name, your stock query, the stock you have invested into, and the time horizon you wish to stay invested. And moving on with the first query, and we onto the expert side, we have Kunal as well as Shahina onto the show. So welcome on board. And Kunal, taking the first question to you. This question is from Bisakha, and he says he is holding 20 shares of KEI purchased at a price of 1,250 rupees. His investment horizon is for the next 3 years. What to do in this particular name?
Well, absolutely. I think stay invested. It's done exceptionally well. The stock has doubled from your purchase price approximately. It still looks very consistent kind of a chart, less prone to volatility, performs very well in the positive phases of the market. So when the sentiment starts to become a lot more bullish for the indices. So I think that's all the right ingredients which you're looking out for when you're trying to time as well as buy mid cap names and ride the uptrend. So I would suggest continue to ride the uptrend for KEI.
Alright, this next query is coming from Vinod. He's writing to us from Dubai, and he's planning to invest for the long term in two sectors, and that is specialty chemicals as well as pharmaceuticals. He wants to know about 2 to 3 companies in the mid and small caps with good return ratio as well as good fundamentals. Shahina, in pharmaceutical and specialty chemicals, which are the counters that you think will stand out? And if you could, it's fine if you give one name each in both the counters, both the sectors, I mean.
Well, I would go with the Deepak Nitrite and specialty chemicals. I think potentially in terms of growth, the stock looks good. Solar Industries also, which covers the defense space, looks good. Hindustan Aeronautics also, I think in the defense space, looks good. And which other sector? Pharmaceuticals. Pharmaceuticals, I will go with Cipla. I think there are a lot of new products that are being launched in the US. And fundamentally also, I think there is a good growth the stock is showing. And second one would be Arbindo. The stock has rallied in the last 2-3 months, but I think there is potential even now because of very decent valuations.
Okay, moving on, and Kunal, this question is from Bhardwaj, and he's already holding 720 shares of IOC at an average price of 85 rupees. What he wants to know is, can he buy and add more at current market price? He's looking to hold it for the next 2 to 3 years.
Well, yeah, I think for 2 to 3 years, you can consider holding on to the stock. I would not say buying or averaging at current levels, because I think after that 3-day back of mild downtrend for IOC from 93 levels to 88 and a half, I believe that there could be a chance that you may probably expect another 2 rupees to 3 rupees drop into the stock price. So maybe closer to 86 and a half could be actually a better level if you're looking to average. But yeah, from a long-term play, I'm certain that you are already aware that this is a low beta to moderate beta stock, and it would probably take a lot of time for the stock to gather momentum. There would be phases where the stock would probably tend to move in correlation with respect to how the crude oil prices behave. So I think that's the major part which you're looking out for. So I'm of the belief that you already know the kind of risks associated with these OMC names. However, I think from a short-term play, if you're looking to time the stock in terms of average, 86 to 86 and a half could be a better level to average.
Okay, this next one is coming from Leon for you, Kunal, and he wants your help in a swing stock from the large cap space. He's saying, as per your lead, he's already purchased HDFC Bank.
So is the query on HDFC Bank?
No, I think apart from HDFC Bank, he wants to know which other counter that he can look at in the large cap space.
Okay. From not exactly from a large cap space, but I think Tata Chemical is something which you can look out for. It's a high beta name, so probably if you can have a strategy of maybe a cover put for Tata Chemical, that could be actually a better strategy for the stock. However, if you're looking to buy, I think at current levels, 1010, 11 on the spot basis looks very attractive. The stock is confirming a breakout of almost 5-6 months of consolidation. So maybe some bit of more breakout on the upside, and you could probably expect a free flowing uptrend for Tata Chemical. So that's a stock which you can consider betting from current levels.
Okay, Shahina, coming to you for next one. This question is on DCB Bank. It's from Seema, and she's holding 500 shares of this counter, but the buying price is 112 rupees. For the medium term, what will be your advice? Is that a hold or sell?
Yeah, it is a hold. The bank fundamentally has done very well in terms of numbers, and I think even in terms of the medium to longer term, it looks good. It may see a bit of consolidation at current levels, but I would suggest you continue to hold. I would see a target of close to about 130, and she can keep a stop loss of close to about 100.
This one is coming in from Vidya. She's from Chennai. Kunal, she's a short-term trader. She's been very open about the fact that that's what her strategy is. So she's already holding AB Capital at an average price of 170 rupees per share. She is making a good profit on this particular counter. Now she wants to know whether it's the right time to book profit or hold. We all know that AB Capital QIP has already opened for subscription. The price band they've set is around 170 to 176 rupees per share. But keeping that in mind, do you think that will change the the charts for the company, and what should Vidya do right now?
You know, I frankly have been very, very optimistic on AB Capital right from the time when the stock was at 114 to 120 rupees, and that is almost like a year back. I would still believe that the breakout of the stock has not yet happened on the long-term basis. The stock is due for a much more bigger upside from current levels. Now, what matters over here is the time frame and the patience with which you can hold on to the stock. See, the stocks would be probably on the back of a lot of news flow, which could keep on happening into the stock prices time and again. But then the long-term trends for these stocks is something which matters for the chart. So I believe AB Capital is a stock which looks exceptionally strong to me on the longer-term basis. You can continue to hold on if you have that kind of a time frame as well as risk appetite.
Okay, so that's the view on AB Capital, the stock which is almost up 4%, and that was an ET Now news break, and Cheryl itself broke this particular news on the channel yesterday around 3 p.m. and see the stock is zooming in trade today as the ET Now news break gets the confirmation. We're moving on to the next query, and Shahina, this question is from Dinesh, and he's holding 5-star, the stock of 5-star. 400 shares at a price of 585. He's sitting at a mild profits at this point. So what's your advice going ahead? Should he continue to hold on? He wished to stay invested for the next 2 years.
I believe the business is picking up, so it makes sense to continue to hold as of current levels after the correction the stock had seen.
All right, this next one is coming from Colonel Devesh Upadhyay. He's writing to us from Pune, and he has been actually tuning into the channel, the show, and has been listening to us quite attentively is what he's mentioning. A few weeks ago, Kunal, he's purchased Suzlon Energy and On Mobile Global for the next 3 to 6 months. He wants to know whether he should stay put with these particular counters or look to exit. The buy price for Suzlon is 14 rupees, about 50,000 shares. On Mobile Global is about 75 rupees per share, around 10,000 stocks. So what should he do with these counters? Does it really merit to stay put even if it is for the shorter term?
Well, first things first, that these should not be your top priority candidates of buy when you're looking to try and trade or even look at it from a short-term kind of a play. I understand that there's a lot of hype which is attached when these stocks, they tend to move up 10-15% higher, but that's part and parcel of every trend for these stocks. So first things first, you should ideally not consider these stocks as strong candidates of buy, especially when you're trying to build a portfolio for yourself. Now, looking at the charts purely for Suzlon as well as On Mobile, the only good part about your purchase is your cost price, because I think the cost price for both of these names, Suzlon as well as On Mobile, both of these stocks you've purchased mostly at the start of or a cusp of a breakout, and these stocks have been taking support at their respective levels of 14 as well as 75 over this last 1-2 weeks of correction. So you can probably hold on to the stocks as of now. Expect that maybe if this consolidation gets over, these stocks can come back to their previous highs. 15.5 to 16 could be an immediate target for Suzlon, and on the upside closer to 80-82 could be a target for On Mobile.
Okay, moving on to the next query, and this question, the next query is on Aarti Drugs. Kunal Sankar from Abu Dhabi has bought shares of Aarti Drug, 200 shares at a price of 650 rupees. At this point, should he average or rather sell on loss for this particular name?
Well, I think you should hold on to it as of now. I would not suggest an averaging out or even an exit. Now, the pure reason for that is because on the quarterly charts, and for the first time in so many quarters, the stock is showing signs of a bullish engulfing pattern, which means that a potential breakout of 500 mark for Aarti Drugs could actually lead into a start of a new uptrend. And remember, I think prior to this, for the last 10 or 12 quarters, the stock has been going into a downtrend. So this could actually be a reversal quarter for Aarti Drugs. So purely in that anticipation, at least for some more time, I think you can just hold on to your existing quantity.
All right, this one is coming in from Vishal. He's writing to us from Dubai. Kunal, this query is specifically for you. See, he's saying he's holding 200 shares of GAIL with 1% loss, and he is not envisaging some long-term prospects in this particular account. So therefore, he's looking to exit out of GAIL and look to invest that money either in DLF, ITC or Indian Hotels. Do you think that this strategy makes sense? Because now when he's going to invest in DLF, ITC or Indian Hotels, it will be for the long term.
Well, I think it makes a lot of sense, frankly, because I would believe that GAIL has been a big underperformer. In fact, I've tracked the chart many a times, and many of the times when the stock actually shows signs of breakout, and when we've recommended, the stock has actually reversed from those levels, and even in the case of a breakdown for the stock, which means that it's inherently a very weak chart to try and go into any kind of an upward trend. So I would believe that GAIL is something which you can avoid at current levels. In case if you are just looking to stick with the PSUs, I would recommend something like PFC REC. That's something which has worked exceptionally well for us, and I would recommend that from current levels you could look out for a good long-term upside. Or else, if you're looking to invest into the names, I would recommend DLF and ITC, or rather ITC and DLF as two candidates from the three names which you mentioned in the same order.
Okay, so that's the view coming in on the PSC names. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
All right, there you go. The flash is on the bottom of your screen. As you can see, if you were thinking that you are in for a midweek holiday, no, that's not happening on a Wednesday, but that will now happen on a Thursday, because that's what the NSE circulars come in. And they're saying, as per the notification of Maharashtra General Administration Department dated June 16th regarding the change in the holiday on account of Bakri Eid on June 29th, and in a partial modification to exchange circular, they have said that they are changing now the current trading holiday from June 28th to June 29th. So the Bakri Eid holiday will be celebrated on June 29th, and on occasion of that, the market holiday was now shifted to June 29th. This is a circular that is come in from NSE, and if you could capture the way how Kunal is nodding his head right now, saying that, oh, was not prepared for it, had made a plan already. You were planning to step out tonight itself, Kunal?
I think the only concern is that the expiry will be shifted from Thursday to tomorrow.
All right. So we will expect the expiry to happen tomorrow. I think there's a circular on that particular front as well. But for now, for all of them who are hoping that tomorrow will be a holiday, no, that's not happening. Market holiday shifted to June 29th. And the only reason why I have this big smile on my face is because I'm on leave from June 30th onwards. So therefore, I can actually prepone my trip, isn't it, Shrishti?
Well, yes, absolutely. But that's the way how the markets have panned into. So let's expect the action before the expiry today itself, because tomorrow is going to be and that's going to be the monthly options expiry as well.
Let me actually also, right, you were talking about that, even Kunal also mentioned the expiry also. Date and the maturity date, they've actually come out with that circular as well. The NSE has come out with that circular as well, with the change in trading holiday and change in expiry date and maturity date of contracts. And they have said that the current trading holiday for F&O also is now shifted to June 29. So like Kunal mentioned as well, that the expiry will be happening tomorrow.
I think this is the last expiry for Bank Nifty on Thursday.
On Thursday,
Yes.
right.
Wednesday.
Now it is Wednesday, because
No,
from
Wednesday.
next week onwards.
It'll
from
be
July,
Friday.
But
From-
that's July 7th, isn't it?
From first week of July, I think it's
That's
Friday.
going to be a Friday.
All right. So that's the latest that is coming in on that particular front. But let's continue taking all of his stock-related queries then. We already have a couple of them. This one is coming in from Gaurav or Gotham. Let me just cross-check the name once again. Gotham. This one has come from Gotham. And Kunal, he has HUL 4,000 shares purchased at 832 rupees per share. And Prime Securities, about 1 lakh stocks at a price of 6 rupees per share. I believe he's been holding on to these companies for the longest period of time, and he's the same gentleman who we were talking about patience and perseverance yesterday. Now he has HUL and Prime Securities, and he's sitting on huge profits. What should he do?
I think continue to hold on. I think both these stocks have done reasonably well. HUL, of course, we all know how the stock has given compounding returns over the last decade and more. And I think even Prime Securities, I think over the last 5 or 6 years, 2015-16 onwards, the stock has done quite well for itself, now at 125 plus rupees for Prime Securities. So, you're sitting on good profits, even on the short to medium term charts. The charts for Prime Securities, they look very attractive. So I think you should consider holding on to both of these names.
And what sort of a near-term target do you have for both of them?
So I think for HUL, I would probably expect 2800 to 2850, which I think, if I'm not wrong, should take the stock back towards the life high levels. That could be a very good or a fair possibility for the stock. And for Prime Securities, looking at this flag pattern breakout, I would expect at least a 25 to 30 pointer up move. So maybe a 150 could be a target for Prime Securities over the next 1 to 1.5 odd years.
Okay, moving on to the next query then. Kunal, once again coming to you because Suresh wants your advice on fact. He's holding 100 shares at a price of 338 rupees. What should he do now? Is that a wholesale or maybe buy more?
See, after such a kind of a steep uptrend, one of the obvious thing is that because the indicators get into overbought, these stocks would get into a periodic phase of correction. Now, just to give you an example, not a related example, but an example is what happened to stocks like RVNL. The stock was initially at 40, consolidated for 8-9 months, had a round of, I think, 15-20% correction, moved on to a band of 80, and now the stock is at 120 plus levels. So I believe fact could also be a very similar chart. The stock to an exceptional up move in the last 4-5 months. I would believe that possibly the stock would get into a correction phase somewhere down the line. But then looking at the volumes and the price volume breakout, I would expect that the stock should be a very strong return potential from a long-term basis. So if you're already bought at 300 levels, you can keep on trading the stock price, maybe booking out 50% profits and then looking to buy back on dips. But then from the longer term play, I believe a target potential of at least 650 to 700 could not be ruled out for the next 1 to 2 years.
All right, this next one that I have is coming in from Rajendran, and he's writing to us from Bangalore, and he wants a good auto anch name to look at and invest in. What's your take on this one, Shahina? Among the auto anch basket, is a huge basket actually. Which one counter do you think stands out?
I think that looks good at counter.
Sorry, missed your name. Missed the stock name.
Minda,
Sorry,
yeah, Minda Corp. It's good at current levels.
all right, Minda Corp is the counter. Shrishti?
Okay, moving on. And Kunal, Vivek wants your advice on IIFL Finance. His buy price is 350 rupees. At this point, how do you see this particular name and what should he do next?
Hold on to it. I think it's done exceptionally well from 350 to now, I think 500 approximately where the stock is trading. Consistent pattern of higher highs and higher lows. Very good volumes the stock has seen in the last 1 month. There was a mild correction, I think almost a week and a half out back for IFL where the stock corrected from 520 to 470. But then I think it's come back close to that 500 mark, which means there is this propensity of the stock to absorb even the short-term corrections at play. So that's also a good behavior of the stock price. All in all, I think it's an attractive chart. And I think since you bought at much lower levels, you have a very good buffer to hold on to the stock.
All right. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere.
Welcome back to Buy Now, Sell Now, and moving on to the next query. And Shahina, coming to you for this one. This question is from Sudhir from Kochi, and he's holding 100 shares of CDSL from a price of 991. Wants your long-term view on the same, and also a couple of shares where he can look for a fresh entry right now.
Well, CDSL, I think with the expanding overall market for investing in India should do well. And I would continue holding. So it's a hold, and you can hold target of close to about 1,200, and you can keep a stop loss of close to about 1,000.
All right, and that was indeed the last query of this edition of Buy Now, Sell Now. It's goodbye from, actually, thank you so much, Kunal, as well as Shahina, for joining us on the show. And we will see you tomorrow, Kunal, given the fact that now you have the holiday shifted to Thursday from Wednesday. But with that, we are totally out of time on this edition of Buy Now, Sell Now. Markets at noon will take the action forward.